Silicon Valley firms are looking at the lucrative Chinese market and saying it's not worth it. Yahoo has become the latest American tech company to exit the world's second largest economy. In its announcement, the internet services provider cited an increasingly challenging business and legal environment. Epic Games, the maker of Fortnite, is also withdrawing from the world's largest video gaming market amid tougher regulations. Last month, the Microsoft-owned professional networking site LinkedIn announced it was leaving the Chinese mainland ahead of strict privacy laws that took effect on November. Popular Western platforms like Facebook, Google, Instagram, and YouTube have been banned in China for years. Now, for more, Joel Flynn has been following the story for us in Hong Kong. He sent us this update.
Well, it wasn't long ago that tech names everywhere were racing to get into the Chinese market. Now, though, it looks like they can't get out quickly enough, all of them seeming to have the same worries. Yahoo has said it's concerned about what it called the business and legal situation in the Chinese mainland at the moment. Enough, certainly, to call an end to all the services it was providing there as of this week, which includes things like email and weather services. Its reasons, though, sound uncannily similar to those given by Microsoft, which pulled the plug on LinkedIn in China just last month. Furthermore, swiftly following Yahoo's announcement was also one from Epic Games, the maker of the wildly popular video game Fortnite. It will close its Chinese version from November the 15th. So, what is happening? Well, to put it in plain terms, the government is cracking down on internet and computer freedoms in China. Beijing has imposed fresh curbs on internet companies which cover issues like consumer privacy. Just this week, in fact, a new law came into effect covering that. But there's also been a real turning of the screw on the content that is available to Chinese users, both online and offline. Back in August, new rules, for instance, limited the amount of time that under 18s there can now spend on video games like Fortnite. That is on top of already stringent regulations on how things in some of these games are being portrayed. Now, predictably, all of this has hit share prices for Chinese tech firms, the likes of which Alibaba and Tencent have been the victim of over the last couple of months. But very clearly, what this also means is that Chinese users have less and less access to Western content and Western services, and companies like Yahoo, like Microsoft and others now won't be able to capitalize on the lucrative Chinese market.
Now to other top stories from around the world. Turkey's inflation accelerated slightly in October, driven by a surge in the cost of energy. Consumer prices rose an annual 19.89% last month, up from 19.58% in September. Last week, the country's central bank raised its year-end inflation forecast to 18.4% from 14.1% in its previous report. BMW has reported better than expected third-quarter earnings as higher prices offset the effect of supply chain issues. Net profit at the German car maker jumped 42% from a year ago to almost $3 billion. Deliveries fell around 12% during the period to 593,000 units as the global chip shortage continued to weigh on the auto sector. And South Korea's biggest mobile payment service, Kakao, has made a strong debut on the Seoul stock market, with shares more than doubling on their first day of trading. That's valued the company at more than $21 billion. Kakao Pay, which is backed by China's Ant Group, had planned to go public in August, but the IPO was delayed after authorities ordered the fintech company to revise its prospectus. And that's all from Business for now.